What's up, apes? Welcome back to the 𝗪𝗚𝗚𝗀 daily podcast of the day. Thank you all for tuning back in on this beautiful Tuesday, August 13th, 2024. It is currently 7:06 p.m. and you know what it is. We got a lot to talk about with markets here today. Let's go ahead and get right into it. We got a lot to go over. So we got the latest inflation data to talk about, of course, because that was a little bit concerning, but probably not for the reasons that you're thinking about there. So we'll break it down for you in just a few minutes. Then we're going to be moving into some of our big stock movers of the day. Make sure to stay tuned to get all of our thoughts on the company that is absolutely eating all of Nike's lunch. They wonder where all their revenue is going. Well, we found it here. And then, of course, find out how Chipotle is getting completely fucked on worse than just about any other S&P 500 company for this session. Then, of course, we'll finish it up with the United States going nuclear. And if you want to know what I mean by that, stick around for the end of the video. My name is David. Like I said, thank you all for joining us. So getting right into the important things, the WSO Alpha portfolio. So relatively solid day for the session. You know, Tesla had a good day. Zillow had a good day. Builders First Source, great day for the home building and really anything related to the housing market stocks, mostly lifted by Home Depot, which we'll talk about in a quick second. But overall, the Alpha portfolio is up 1.48% for the day. Not earning any alpha on the daily session, unfortunately, but still, trust me. Go ahead and sign up for WSO Alpha. You can see all of our brokerage reports from the past. You can see our return since inception, 10 years, 5 years, 3 years, 2 years, whatever you want to do, because literally you would have to cherry pick this data for 2024 so far to show that we're underperforming, but it still is the case nonetheless. The NASDAQ was up 2.43% for the day. The S&P 500 up 1.68%. Most of this lift comes from the added probabilities for a rate cut at the September meeting because of what we saw in the inflation report for the day. So we're just going to go ahead and move right along into the banana bit so that we can talk inflation and that I don't take up as much of your day as an actually decent sitcom, and so we can actually, you know, adhere to the standards that we should probably uphold. Okay, moving into these banana bits, we have first and foremost, great news, because the basic foundation of just about every retirement plan in the United States is finally back in session because stocks and bonds finally have uncorrelated returns for the first time since Gen Z's version of 𝗏, which really is the COVID pandemic and being locked at home with your family. I don't know which one I would prefer, to be sent to a battlefield in the jungles of Vietnam or to sit at home with my parents again. But nonetheless, really, since our Vietnam, bonds and stocks have been quite correlated, and it's fucked over the whole idea of the 60-40 portfolio for a good bit since then. Now it looks like nature is healing once again. Things are starting to normalize, and we're getting those uncorrelated returns back in action. Meanwhile, momentum behind earnings guidance that's been released so far in Q2 is actually positive, and it looks like this is the first time in the past 3 years that we're going to have a positive outlook heading into Q3. Now, we are well into Q3. We're about halfway through it right now. But what they're talking about is heading into Q3 reports, which should start around, what would it be like, mid-October, late October. At the same time, Google's been big in the news lately with its antitrust case, and they are not letting them stop them from acting even more monopolistic because they just came out with a brand new phone, the Google Pixel 9. That's not necessarily monopolistic, but the changes that they just made to their artificial intelligence services definitely aren't going to help. It is a big change. Gemini is getting a huge upgrade, not the Winklevoss fucking crypto platform or whatever the hell that shit is. We're talking about Gemini, the artificial intelligence tool from Google, and it is looking like it's getting spruced up a little bit. Maybe might be able to compete with ChatGPT going forward. Okay, markets just gave a $20 billion compliment to a man you probably have never heard of before, Mr. Brian Niccol, the former CEO of Chipotle and now the CEO of Starbucks. Markets absolutely lost it with this announcement today, so that's actually one of the big stock movers. So we'll break that down in a minute. I don't want to step on our content like I usually do. Then, of course, it did not take long at all for Elon and Donald Trump to get sued over the discussion that happened on X the other night. I was going to say last night, but you're going to see this tomorrow morning, so it's technically 2 nights ago for when you're going to be seeing this. But nonetheless, Donald Trump and Elon Musk are shared defendants in a lawsuit, or I guess legal charges. I don't know if it's a formal suit yet, from the United Auto Workers Union, basically because Musk and Trump were like hyping up firing employees that want to start a union, and that's just blatantly against the law. But I don't know if you can, what is this, fucking 1984? We're going to sue people for pre-crime for saying that they want to do something? Fuck out of here. It's not a terrorist act or an assassination attempt on the presidency or anything. Okay, let's go ahead and move. Oh, make sure to take our daily poll of the day as well. We're going to be talking about which stock is going to perform better over the next 12 months, whether or not it's going to be Chipotle or Starbucks. Okay, moving on down into our main macro story of the day. We are talking about disinflation and deflation because that's what's going on in the inflation print here today. So really, if we take a step back a little bit, for portfolio managers across the United States, the most important days in their lives, weddings, birth of their kids, and when inflation falls. I can't think of anything else that would cross the list. The only difference is these portfolio managers will actually remember the days that inflation started to fall or move back into positive territory. So, Tuesday, August 13th, that's going to be a big day for portfolio managers going forward, and really everybody that Kanye is offering a toast to in Runaway. I think we all know the lyrics that we're referencing there, but the story is that wholesale inflation continued to decline in July, might be declining a little bit too much at this point. Maybe 𝗟𝗑𝗏 did his job a little bit too well. What exactly do I mean by that? Well, as always, let's go to the chart. And let's see what's going on over here, this chart that's going to be very hard for you guys to look at. By the way, I'm going to be getting a whole new setup soon, so look forward to that. But for now, just bear with me here. This little black line right here shows you all final demand for the producer price index, aka the PPI, whereas what you're seeing in this blue line is goods prices, and in the red line is services prices. So as we can see, a little bit of a divergence between goods prices and services prices in the past few months. We have seen goods prices remain deflationary for a good bit, but now they're trading with services. So overall, on the monthly basis, PPI, the producer price index, a measure of wholesale inflation in the United States, increased to 0.1% for the month. That was great to see because it was a decline from June, and even better when we look on the annual side, because when we look at the, actually I have a chart of this. When we look at the annual prints right here, what do we see? A little bit concerning because it's been going up all throughout 2024 so far. Since January, we've been getting successively larger year-over-year increases in the producer price index. Now, a lot of this has to do with the data that we were getting during this time in 2023, but nonetheless, it was very positive to see us go from a 2.7% annual PPI in June to a 2.2% annual PPI here in July. 2.2%, does that sound familiar? Well, it's about 10% higher than the Fed's actual target at 2% inflation. So we are well on our way there. Congratulations, 𝗟𝗑𝗏, you got the job done. So we're looking good here, and really to break down the actual numbers that mattered here, what we saw was an increase in final demand goods of 0.6%. Now that is hot for sure. That's a spicy increase right there. It's very much warmer than what we're used to. But at the same time, we also saw a 0.2% decline, not just a slowdown in price growth, but an actual decline in prices on the services side of things. And that matters a whole lot more because within the PPI, services make up roughly 67.9% of the index's weighting, whereas goods make up the remaining, I'm not good at mental math, they make up the remaining majority, or whatever the fuck's left over after 67.9 or so. Pretty sure I wrote it down right here. I just can't see it right now. But still, this 0.5% decline is huge because it's basically confirmation that we've killed the beast. Like, we had a brief uptick here in 2024 going from 1% all the way up to 2.7% between January and June, but we're back heading in the right direction once again, and this only helped market odds move higher for a rate cut in September. Now, everybody and their mother knows that a rate cut is coming in September. The only question is how far that cut is going to extend. So as of today, or really as of yesterday, let's talk about yesterday first. We're talking about Monday, August 12th. The odds, as we can see in this chart, right at 50-50. There was a 50% chance of a 25 basis point cut and a 50% chance of a 50 basis point cut. Whereas in response to this producer price index inflation data, what we're seeing is that the odds of a 50 basis point cut increased by roughly about 4.5%. Now the majority is favoring a 50 basis point cut going into the September meeting. That means that's good, but also a little bit concerning at the same time because it's good for equity prices because the further cut we get, the more they're going to go crazy, at least on the day of the actual announcement. Now, we don't know if it's actually going to be a good thing when they start cutting rates because it's only good for stocks when rates are cut in the long term when you avoid a recession. And according to Jamie Dimon and a whole lot of other way smarter people than I am, a recession is still very much on the horizon. So it'll be good for the session, probably good for the week or so, but don't get too excited about it in the long term, I guess maybe unless the rates keep coming. Whereas if we do a 25 basis point cut, because now the majority is pricing for a 50 basis point cut, 25 basis point cut will actually be a downside surprise. We could see a decline on the day if it's only 25 basis points. We all know that 𝗟𝗑𝗏 likes to fuck around and pump the market though, so I'm sure he'll just do whatever the market tells him, specifically the fixed income market, the quote unquote smart money. But that's basically the story for the day. We also saw treasury yields. The 2-year yield fell below 4% once again. It's really been fighting going below that 4% figure, but it declined there after the JOLT report and the yen carry trade bullshit a couple of weeks, or really at the start of last week in the weekend that was transitioning into last week. So this is the first time that we're back below 4% since then. And at that point, that had been the first time that we were back below 4% all year at this point. So, good sign on the yield side because, with these yields declining, that's basically the market saying that we're definitely going to have rates go lower. That's going to be great for mortgages and pretty much great for the economy as a whole. That about does it for the macro story of the day. We're going to keep it a little bit shorter here. So let's go ahead and move into some of our favorite stock movers. First and foremost, we have On Holdings. Nike, I have found them. You said just do it, and On listened. They just did it. They are eating all of your margin, taking all your customers. Nike Vapor running shoes, fuck them all. I want On running. At least that's what the consumer is saying in Q2. So I think it's about time for Mac Miller to change Nike's on my feet to just on my feet, because that's what all the consumers are doing out there. On Holdings, they released a great earnings report for the session. They beat on the top line with a slight earnings miss on the bottom line, but nobody really cared because guidance was so strong and there was 28% revenue growth, while the likes of Nike, Under Armour, I don't know if Under Armour makes shoes, but the likes of Nike and other big shoe providers are having a tough time kind of struggling in the aftermath because discretionary spending is still on decline, especially when it comes to the apparel industry. But it looks like those of us who are continuing to spend discretionarily on the apparel industry are choosing to do so through On instead of Nike. And from what I've heard, On shoes are pretty sweet. I'm personally a huge Allbirds guy. These are my Allbirds, of the pretty much everyday shoes. If you're ever wondering what I got on my feet, that's what it looks like. But I might have to check out some of these Ons. If anybody's ever worn Ons before, please let me know. I would like a personal review. Okay, moving on down into our second stock mover of the day, we have Home Depot up a measly little 1.2%, but we wanted to talk about it here because this is a real company, unlike a lot of the other ones that moved higher here today, and it moved higher for an actual reason. The company beat across the board in Q2, despite the fact that they started selling Halloween items or Halloween decorations in fucking June. But I guess people were buying them because they did beat on both the top and the bottom line. Now, markets, the stock had sold up by about 4% in the morning session and pre-market trading because guidance was abysmal. Now, Home Depot, just like a lot of their customers, they keep it real. They're not going to bullshit you. They basically said same-store sales is going to decline 3 to 4% for this fiscal year. They did decline by about 3.3% for the current quarter. So we're basically just going to be seeing the exact same trend that we have. Markets are giving them some credit because it's not exactly Home Depot's fault. They're still gaining market share in the home improvement and home repairs market. But the market cut them a little bit of slack because of that. They're continuing to gain share, and it is the housing market overall that's kind of holding these stocks back. So to see that Home Depot is still able to keep up kind of pumped the housing market overall. See again, Builders First Source, Zillow were some of the outperformers in the alpha portfolio for the day. Nonetheless, a great day for Home Depot. Moving on down below into the what's rotten stocks of the day, we have first and foremost Tencent Music Group. God, if I was the founder of this company, I would be shitting my pants right now because the stock was at roughly a $25 billion market cap before yesterday's 15.3% decline. So when companies get that big in China, it's hard not to get a little bit concerned. Now, the only other parallel that I know is Jack Ma. That guy got disappeared. So if I was the founder, I'd be a little bit worried about getting disappeared myself. But at least for this quarter, the only thing disappearing is users, because we saw some huge declines in their user base, a 32% decline in the total number of MAUs, monthly active users, on Tencent Music Entertainment Group's music streaming platform. Now, you might think, David, that's no problem. They probably just increased ARPU, right? They probably increased subscription prices, and that's why a lot of them dropped off. Absolutely not. That couldn't be more wrong. 46% drop in ARPU, so just an absolutely disgusting performance on the music side of the business. Now, we also saw over on their other streaming portion of the business, this is like their social media unit. I guess it's kind of like Venmo meets Spotify is what it sounds like, where it's like music streaming as well as social media, but it's based out of China, and I haven't been there before, so I don't use this thing, to be honest with you. Maybe one of our Chinese listeners out there can explain to me exactly how this works, because they also saw a loss of 4% of users on the social side, increased ARPU by about 10% on that side, and in total, revenue fell 1.7%, missing estimates by about $11 million, reporting $985 million for the quarter. Moving on down into everybody's favorite restaurant, apparently, we have Chipotle Mexican Grill. You couldn't describe a more overhyped restaurant than Chipotle, to be honest with you. And apparently a very overhyped stock as well, because shares fell about 7.5% on the session today, simply because their CEO was departing. Now, I think the shock to investors this morning was similar to the shock that customers feel when they see prices post-pandemic, because they've increased more than Nvidia stock at this point. But basically, what happened is that Starbucks recruited their CEO, Mr. Brian Niccol, to bail on Chipotle and come over to Starbucks. I can't imagine what kind of pay package they would have had to offer him, because this guy has been in the CEO chair at Chipotle since about 2018. He's overseen a 690% increase since then, and at times it was up about 940% during his tenure. So he probably had a fat paycheck that was coming his way. I don't know if it vested already or what, but he said, fuck all that, I'm going over to Starbucks. And Starbucks booted out their current CEO. Starbucks shares were up 24.5% on the day because of what a good job Niccol did with turning around Chipotle. Remember, there was a lot of shit going on with I don't know if it was a listeria outbreak or like whatever the fuck the name of that disease is that you get from chicken. It's not pneumonia, but that's what I have stuck in my head nonetheless. But still, did a great job turning around Chipotle. Starbucks very much needs a turnaround to get sales back moving in the right direction, and that would be specifically up and to the right. They haven't been doing so hot for a little while now, so they're hoping that Mr. Brian Niccol is coming in here to save the day. God damn it, I forgot to change this chart over here once again, so pretend that this is what you saw the whole time that I was talking about equities if you are watching the video here today. But nonetheless, let's go ahead and move on into our final story of the day. For Thought Banana, we are, of course, talking about the United States going nuclear. Now, in case you don't know, the United States has 5,044 nuclear warheads that the public knows about. Go talk to Annie Jacobson. I'm sure there is a whole lot more, and about 1,300 of those 5,044 are being retired this year or have been retired in recent years. Nonetheless, that's the total that we have right now. Now, if you take 1.8% of that number, that's how much we have in nuclear reactors. So the United States populace, especially if you're over the age of, say, 50, you're probably terrified of nuclear. I mean, I don't mean to overgeneralize for you Gen Xers and boomers and everything out there, but it seems to be the older population that is hesitant on the nuclear side of it. And quite honestly, I can understand that. We had Chernobyl, we had Fukushima, we had 3 Isle Island. It's a little bit concerning, but we have 5,044 nuclear warheads. Why aren't we concerned about Hiroshima and Nagasaki or the end of the fucking world at the same time? We'll kill nuclear power, but we're not going to kill nuclear bombs. Regardless, we could rant about this all day long. Let's talk about what actually happened and why we're talking about nuclear reactors. So, go ahead and take a look at this chart right here. I know it's a very pretty purple color, but try not to get distracted by the color and the prettiness of this chart here. Take a look at this last bar, because what you're seeing is $13.9 billion of investment in nuclear reactors so far in 2024. Huge step up, more than double what we invested in 2023. So it's great to see that investment in this clean, reliable, basically endless supply of energy is coming back online in the US. So to take a step back a little bit, I'm not a nuclear scientist. I know a lot of you out there are probably thinking, God, this guy is so smart and handsome, and look at that mustache, he must be a nuclear engineer. But no, unfortunately, I am not even close to being as smart as it would require to sign up to take a nuclear engineering program. So let me give you the rundown as I understand it. Nuclear energy is a phenomenal source of energy. It's safe, reliable, and basically provides some of the most scalable energy efficiency in the United States. So you look at countries like France, about 64% of that country's power generation is from nuclear plants. Now, in the United States, it's about 20%, and that all comes from 94 nuclear reactors. If we take a look right here, this is the total output from nuclear in the United States. So right here, we can see that there's 94 operable reactors in the United States. There's currently 0 under construction and 41 reactors that have been shut down in recent years. Now, what you're seeing here looks very flat, but from about 1997 until 2011, we were slowly, gradually increasing. Then from 2011, we got a little bit of an uptick in 2016, but since then, it's just been on the decline until 2024 and 2023 came onto the scene. That's when we started to see an increase in the number of reactors as well as the amount of energy output that they were able to generate. So we had 93 reactors in 2023, 94 in total right now. So we're starting to lean back into this, and broke-ass Uncle Sam doesn't even have to have anything to do with it. Now, there's not a whole lot that he could do with it because, see, again, broke-ass Uncle Sam, but at the same time, we're seeing a lot of activity going on in the private markets related to nuclear, and that's on both the fission and the fusion side. Let's go ahead and take a look at the cost profile of nuclear energy. So what you're looking at here is called the LCOE, or the levelized cost of energy. So this is basically attempting to estimate the cost per megawatt hour that these plants are going to be producing, or that the various sources of energy can produce. And so on this chart, we have nuclear in blue, we have coal in red, and we have gas in yellow. So the complicating factor here is that at different fuel cost, in terms of fuel cost percentages, it's very variable on which is going to be the most effective, and then you factor in interest rates, which makes it even more variable. So for factories like nuclear and coal, it's not a huge difference regardless of what the discount rate is going to be. But for nuclear energy, it absolutely is, because the cost of capital to build up a nuclear reactor is so much higher than it is for a coal plant, for a gas plant, for, oil plants, or whatever the fuck they're called. When it comes to the energy side of things, it's much cheaper when you have low interest rates, but it's much higher when you have high interest rates. And of course, it depends on the actual funding. Most of this is done through some kind of combination of credit and equity through these private companies, but still, it can vary quite a bit. But the fact is, when this nuclear reactor is up and running, the actual charges to the end consumer tend to be much lower, because nuclear energy is very scalable. It's very, I don't want to say easy to produce, because, see, again, very hard to get one of these things actually up and running. But once they're up and running, it's a repeatable process. It doesn't turn off. It doesn't have to, you don't have to worry about there being clouds and you not having energy. You don't have to worry about there not being wind and all of a sudden you don't have energy anymore. When we're talking about efficiency, nuclear reactors are about 90% efficient according to the IEA, whereas solar is roughly about 25% efficient and wind is about 35%. That basically means that for the energy inputs that are going into it, this is the percentage of inputs that it spits out in energy. But see, again, nuclear is about 90% efficient, solar about 25. Like I said, it's the most scalable source of energy, emits basically zero emissions once it's up and constructed. They generally last for over 40 years or so, so even less repairs than your average coal or gas facility is going to be needing. Now, aside from our primal fear of building these things, there is a huge cost, but nonetheless, this is great news for all of you fucking Greta Thunbergs and green energy freaks in the world, and for anybody that wants cheap, reliable, scalable energy sources. So it's both the Greta Thunbergs of the world and the actual practical humans with a brain out there that can get behind nuclear energy. I strongly encourage reading into this a little bit more. We don't have a whole lot of space to talk about this stuff, but a great place to go ahead and read about this would be on the websites of companies like Commonwealth Fusion Systems. This is a Massachusetts-based company that's working on fusion reactors. We have TAE out in California. We have Helion, which Sam Altman, the CEO of OpenAI, is involved with, and we have General Fusion. Now, fission, by the way, is the nuclear reactor bullshit that we've had forever. That's when you're, I believe, splitting an atom apart. But then when you are fusing an atom together, that creates way more energy. That's basically like the sci-fi level, limitless, free energy side of things. And it's great to see that some companies are working on this, because this could actually be a future that comes into play. So for now, the question is, should we prioritize investment in nuclear over other renewable energy systems? So we know, like, according to Elon, if you fucking load up like 500 square miles or something of solar panels in the Sahara Desert, you can power the entire world. Based on the numbers that we're seeing here, it seems like you need like 10,000 nuclear reactors and you can power the entire world. I don't know if that number is right whatsoever. Somebody can certainly correct me, but it's great to see that we're investing in these energy systems, moving towards that clean energy future. So, always a good thing. Some good news from the Daily Peel for once, and we are very happy to share it. Let's go ahead and move right along and close out the podcast/video stream of the day. Thank you all for joining us once again. As always, I totally forgot to put a quote in for the day. I will go ahead and add that in right now, so be on the lookout for it in tomorrow's edition. Make sure to vote in our poll. Make sure to leave us a like, subscribe, comment, whatever the fuck you can to boost our algorithm. It is now 7:30 p.m. on the dot. I will see you all tomorrow. Happy investing, happy trading. Bye now.